Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, senior editor at WeissRatings.com. Welcome back to the show, Sean.
Thanks very much for having me on.
Sean, the U.S. Fed has made an emergency 50 basis point cut to their trend-setting rate. Has it helped the equity markets?
Not at all. Now, it did for a while, but then the harsh reality sunk in that, rate cuts aren't going to fix what ails this market. So then we saw everything sell off again. Gold's doing well, and I'll tell you why. Have you been watching the U.S. dollar at all, Jim?
Well, it's connected to gold, isn't it?
Yeah, but interestingly, the last week saw the U.S. dollar really start to fall from its highs because what was happening was traders were starting to price in a pretty good cut from the Fed. I don't know if they were pricing in 50 basis points, but they were pricing one in. And so then we had the news of the cut on Tuesday, and what should have happened, what ordinarily would happen, is that since the cut happens, then the pressure would come off the U.S. dollar, but that's not what's happening. Instead, we're seeing the dollar go lower and lower. And so what that's telling us is that the market is actually pricing in more and more cuts. Now, they only need 100 basis points to get down to zero. President Trump says he wants U.S. interest rates to be the lowest. Well, the lowest in the world are actually negative. So I'm not sure if that's what we'll go to, but the market's starting to price in the possibility that we're going to see at least another 50 basis points of cuts, maybe more. And so that's weighing on the U.S. dollar. Since gold is priced in dollars, as the dollar goes lower, gold generally goes higher.
Mm-hmm. Now, generally, as interest rates fall, it takes the local currency of that interest rate down with it, doesn't it?
Yeah, that's what we're seeing here, is that not only is it a 50 basis point cut, but they are expecting the Fed to cut more, which is why the U.S. dollar continues to fall.
Now, low interest rates, of course, are very harmful to pension plans, insurance companies, and banks. Has that been taken into consideration?
Of course not. The only thing they care about in the White House is the stock market. They want to see it go higher, and they want that to go higher going into the election. This is an election year. And of course, political concerns are going to outweigh other factors when you're in an election year. So, what I would expect going forward, because this Fed, by the way, is very political. They do pretty much whatever President Trump says. They may complain about it, but they do it. So, if I were betting on this market, I would bet for more of the same. More cuts, weaker dollar, higher gold. That looks like a good bet here.
Mm-hmm. Now, the U.S. is a big importing country. Doesn't a higher or a lower dollar make it harder for your imports and increase the cost of living?
Well, that's the weird thing. Is it should be inflationary. You're absolutely right. It should be. We aren't seeing inflation, though. Maybe in the next month's data we'll start to see it, but right now we aren't. One thing that people are actually kind of wondering about this is why aren't we seeing inflation? Maybe this is a sign that things are worse in the global economy than we think. I mean, the virus is the headline news, but it's not the only news. There is other news. There are other risks, other factors that are pushing this market around. They've just been pushed into the background now because everyone's afraid of the virus. And one thing I would like to emphasize, it isn't the virus so much. It's the fear of the virus that paralyzes economies and actually has the impact. It's that fear. And so if we get more used to it, if we learn to live with the virus, then, all this can really go away, and we'll have a low interest rate environment, and that could actually make things pick up. But on the other hand, many factories in China will be shut for 2 months. They'll only restart it at the end of this month. And 2 months without the Chinese economy is a long time. So, that's going to definitely drag on global economic growth.
Does the shutdown of Chinese factories show just how closely connected everything in the world economy is? Although you may assemble a computer in the U.S., the parts for it came from China.
Yeah, that is kind of a problem. But I don't expect our present system to actually do anything about it, because what we look for is the cheapest source of all supplies. And China, and also other countries in Asia, generally tends to be that cheapest source. So it would take a command economy, much like China has, where the government can just tell companies, you are going to do this. We don't have that in the U.S. So our supply lines will be impacted for a while. I don't expect outright shortages, though the way people are acting at Costco, you might think there will be. But, there will be impacts. There will be things that can't get built. For example, you can't build just 90% of a car, right? And if the parts are coming from all over the world, and you don't get that last 10% of parts, you aren't going to ship that car out. So that could be kind of a problem for that. Plus the fact so few people, or I shouldn't say so few people are driving, but less people are driving. That's one thing that they've noticed in China and elsewhere, is that the amount of fuel they use has just gone through the floor because they're all sitting at home, probably playing video games. They're not working, and they're just trying to ride this thing out.
We'll have more with Sean Brodrick right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Sean Brodrick. Sean, what's your outlook on gold considering the state of the equity markets?
Well, I expect more rate cuts. And so even though we saw a 50 basis point rate cut cause gold to jump $50 an ounce in price, if the market's anticipating more rate cuts, which I think it is, that means that gold is going to zigzag its way higher. As gold zigzags its way higher, select mining companies that are well leveraged to the underlying metal are going to do extraordinarily well. That's what we're seeing in the portfolio from my Gold and Silver Trader publication today. I mean, everything is up. Literally everything is up, and up by quite a bit. I mean, when you have West Dome up by 10%, when you have say Anglo Gold up another 10%, when one stock after another is having a very steep rise on the day, that shows you what can happen as this thing plays out. I don't expect that kind of rise every day. In fact, a pullback wouldn't surprise me. But one thing people have to come to terms with is we are in a new gold bull market, new gold and silver bull market. That means pullbacks can be bought. Get your shopping list ready. Be ready. There will be a pullback, much like we saw at the end of last week when everything was being sold. Silver, limit down. Oh my gosh, everything's horrible. How can you hold on to these things? And yet, all it took was for a couple of days and then zoom, everything goes higher again. So, I think we'll have more opportunities like that, more pullbacks like that, and those are pullbacks people should buy.
Yeah, it was interesting watching business television, how there's big red squares around the equity markets, except for the Toronto Venture Exchange, which had a big green box around it. I haven't seen that before.
Yeah, well, I mean, it's not a bad day for all sorts of things, right? I mean, and we saw oil was like pushed down for so long; it's finally getting a bounce. We are seeing things like, platinum's holding up, silver's holding up, gold's doing extraordinarily well. So a lot of the things that are in those smaller natural resource focused stocks that are on the venture exchange, they are going up. So of course the venture's going to do well. And the venture has been beaten down, much like many gold stocks. It might be a buy right now. I haven't looked into it closely, but that might be one place I start looking.
We'll have more with Sean Brodrick right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Sean Brodrick. Sean, on the oil market, is consumption down radically because of the slowdown in China?
Yes. I mean, I think one estimate I saw was like 1 million barrels per day, or it might have been 750,000. But in any case, it's down. Now, on the bright side, they seem to have reached some kind of bottom in China. That's what some of the bullish sentiment we saw on Monday was about. They said, well, you know what? They don't have new cases and stuff like that. We'll see. And we are seeing Chinese companies start to import oil again, stuff like that. So, that isn't a permanent change. It's just it was a big hit for a while. Also, we have OPEC. They're now talking about $1 million barrel per day cut. I don't know if they'd follow through with that. Most of it would come from Saudi Arabia, but they want the price of oil higher to help their Saudi Aramco. So, I think oil, if you believe in the longer term growth story, it's not a bad place to buy here. Just remember, we are going to have more downside shocks. And so I wouldn't chase anything. But one reason we've had so few cases in the United States is because we don't have testing kits here. We turned down the ones from the World Health Organization, and the testing kits that the CDC shipped out were apparently flawed and contaminated. So very few people have actually been tested for the virus. There's probably a lot more that have it, but they just haven't had the testing done. So as that news breaks and as more and more people actually are learned to have the virus, that could be another shock to the market. But again, look at the underlying story. The underlying story is that we have seen virus panics before, whether it was SARS or the bird flu, you name it, and we always bounce back. So I think people have to be aware of that, not like sell everything and like climb under their desks, but just look at this pullback we're having now for what could be a really good opportunity. Now, the one way that wouldn't work out is if what's going on in China and elsewhere leads to a real global recession. If that happens, then the recent low prices might not be the lowest. We could see things go a lot lower. I'm not trying to make any predictions here. For one thing, we have a real shortage of information. We don't know what's going on. So I think trying to make predictions in this environment about the virus itself, that would be just an exercise in like futility. What I can tell you is that the market is pricing in more rate cuts. That is putting pressure on the U.S. dollar, and that is probably going to push gold higher. And so that's the way that I'm playing it, and I think many people will come around to that point of view too.
Any other areas that you're looking at right now?
Well, I'd like cannabis to pick itself up out of the gutter, but apparently that's not happening right now. You would think that's an industry that's immune to this kind of thing, but nonetheless, we've had one string of bad news after another from all these big Canadian companies. Like the Green Organic Dutchman and Kronos and stuff like that. Just terrible news. So that seems to be weighing on the sector. So I'm not really watching that. And if you want an idea of what's going to happen with the global economy and how it'll react to the virus and other things that are out there. The virus isn't the only force on the market. It's just that's the one grabbing the headline now. There are other bigger things going on as well. Keep an eye on copper. We call it Dr. Copper for a reason because it takes the temperature of the global economy. And it seems to be trying to put in a bottom now. It's having a bad day on Tuesday, but you know what? It looks like a real pattern that could be a bottom. And so definitely keep your eye there. If copper starts to grab traction, if it starts to move higher, that means that the worst probably has passed in places like China. So definitely watch copper and see how that goes, because that could give you a good heads up to what to expect in the weeks and months ahead.
Being an authoritarian government, could China order workers, once the virus has passed, to put in overtime to try to correct the downturn in their economy?
I'm not an expert on Chinese labor relations, so I don't know. But, I wouldn't put it past them.
Sean, thank you so much for chatting with us.
Thank you.
My guest has been Sean Brodrick, Senior Editor at WeissRatings.com. If you have any questions for Sean or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.